So today, I would like to talk about a very interesting but confusing topic. Is it how to recognize the pre-establishment expense as the deductible expense for covering income tax purpose. So we will look at an example of pre-establishment expense for the foreign invested enterprise. As you all know that before the FDI is been foreign invested enterprise obtain the investments registration certificate and enterprise registration certificate. There may be a lot of expenses arising prior to the establishments, and these expenses may consist of salaries, service fees in relation to pre-establishments, and construction fee. Uh, the expenses may be paid by the overseas parent company, or it may be paid by the overseas sister company, or any authorized individual. Um, and in this case, we will discuss about how such expenses can be recognized as deductible expense for corporate income tax purpose. So we can look at the condition for the deductibilities of pre-establishment expense. The first condition is the company should have the supporting documents and argument to prove that the expenses are in relation to the establishments and business activities of the company. And the company should have the authorization letter if the parent company authorized, like a sister company, individual to pay on behalf regarding such expenses. And the company also should have the legal supporting document like having the name, passport of the paying entity on the service contract, debit note, and invoices issued by the foreign suppliers or Vietnamese supplier. And we will look at the most critical but complicated condition reimbursement of such pre-establishment expense. So why is it so complicated to reimburse such expense? Because you can see that in order for such expense to be deductible, the Vietnamese enterprise needs to reimburse such expense to the overseas entities. If the entities pay on behalf of such expense is Vietnamese entities, so it's very easy for the Vietnamese entity to reimburse another Vietnamese entity. But it should be very complicated for Vietnamese entity to reimburse to overseas entity, because the payment to overseas entity would subject to many conditions under the foreign exchange control. And based on our practical experience working with the bank in similar scenario, we would like to present three options. The first option, it should be the most visible option for the company, for the Vietnamese enterprise. Is it restructure the pre-establishment expense as a foreign loan? It means that under the option, the company in Vietnam and the overseas enterprise should prepare a lot of supporting documents such as the agreement between the parent company and the overseas entity that the overseas entity was authorized, was delegated to cover to pay on the cost of pre-investment preparation for the Vietnamese entity, and all of the entity agreed to convert in such expenses to offshore loan. And for the loan, for the offshore loan contract, there should be the conversion agreement between the overseas entity and Vietnamese entity with all the content of an offshore loan that specifies the amount, interest, conditions. Some of the banks also require the business plan containing all the mandatory contents in line with the regulation. And for the short-term loan, the company in Vietnam need to do the report to the state bank and for the long-term loan, it should do the registration with the state bank. The bank also require that the company should have the accounting book to prove that the pre-establishment expense is recorded in the accounting book. And in practice, my client, most of the company would choose the option. But you need to contact the bank where the Vietnamese entity open the bank account in order to seek their explanation and guidance. The second option is reimbursement the foreign investor the residual amount, but the option is not feasible because under the option, the foreign investor needs to open the onshore account in Vietnam and use the amount in the onshore account to pay to the local vendor. But most of the investors would not follow this option when establishing the company in Vietnam, so it's not feasible. And the final option is converting the pre-establishment expense to contributed capital. Under the option, you should contact the law firm in order for them to provide the service to obtain the new enterprise registration certificate and IRC. The option should be so complicated. So in summary, you can consider the first option, convert the pre-establishment expense as the foreign loan fund to be, in order for the expense to be paid to the overseas entities. And in practice, the bank will need all the detail of summary of all the pre-establishment expense that the Vietnamese company convert to the loan in order for them to assess the condition of reimbursement.